traders. In this video we're going to be looking at the subdem breakout TS, which is actually a combination of the demarc breakout lines in conjunction with using the supply and demand zones as confirmation. So it is actually using both of them. So it will look for a breakout on the demarc trend lines, and then it will look for a confirmation from the supply or demand zones. So let's open up a chart here and see what we do. Let's drag it over there. Inputs. Let's just get it on the chart here first. Okay, now you can see it looks fairly familiar to the other ones we've had with the supply and demand zones and the breakout lines, and you can see it's a combination of the two. Here you have your supply zone, here you have your latest demand zone you'll be trading from, and this is your trading zone. In this case we had it set for 50%. And we do also use risk reward in this, so you say, well, why would you want to trade if your take profit is way up there? Well, basically the last confirmation comes from the risk reward, which in this particular case I believe is set at 1. So if we can't get a risk reward of at least 1 to 1, it won't take the trade anyway. So the trade zone works out fairly well if you just leave it at 50%, because your R&R is the final factor in determining the trade. Now this one does have a few more settings. Fixed take profit. If you want to use a fixed take profit, you can use that and set this at a certain number. In this case the default is false on that. We're using the auto take profit, which is just like the other subdem one. In this case we're putting it at 50%, so in this case if it took a long trade it would put a take profit at the 50% point. Stop loss, you can use a fixed one if you want to and set it at a certain pippage, or you can use the we have a normal, what I call a normal automatic stop loss, which will, in this case we're going long, it'll place it down at the bottom of the green zone. Or if you set that to false and set the tight subdem fixed stop loss at true, it will place it at the top of the box. Now just remember, any of these, you use them here, can be moved once the trade is open. Just double click them and move them if you want to move them around. Now in this particular version we also have what they call a dollar stop loss, which is at the false. What it does, it looks at, remember when you're got a trade open, you will get a number down here that tells you what your profit or loss is at the present time. What this does, it looks at that number. Now what it does, it waits until you get 61.8% into profit. Now the profit is calculated from where you enter the trade to where your take profit line is. So when you hit 61.8% of that distance, then this kicks in, and what it does, it watches that profit or loss number, and in this case if that number goes back down to 0, it will close the trade. So if your dollar value, say, is up to $20 and you hit your 61.8% point, it kicks in and then it starts backing down, and you go to $0, it will take you out of the trade. Now you can change this if you want to, or you can change this 0.618, which is 61.8%. And we also have the trailing stop loss BIP. In this case, when it hits 15 pips, it will trail by 15. When it hits 20, it'll trail by 10. Hits 25, trail by 5. And you can set this to true if you want to use it. If you want to use just the first two, you can set these other ones to 0. You can set these at whatever you want. Just remember, you have to set them in pairs. You got to have a target. You got to have a trail for each one. And the ones you don't use, make sure you set them to 0. And don't skip any and then put some down here, because it'll stop at the first two. Once it sees these zeros, nothing below that counts anymore. So, and also we got the add to trades, like we've had in some of our previous ones, where it will add to a trade when it reaches these particular percentages. This percentage, remember, is the distance from where you entered the trade. So you entered right here, and say your take profit is up here at the 50. This is at 23.6%. When it reaches 23.6% of its travel up to the take profit, it will add on a trade. When it hits 38.2%, it'll add on another one, and you can do a couple more. And it adds them on in this case with a lot multiplier the same as what your lot size is. So if your lot size is 0.1, multiplier 1, first add-on is always the same as your lot size. So the first add-on is 0.1. Second add-on will be 0.1. Third one will be 0.1. Unless you use Marty. If you use Marty, then this number will keep increasing. The first add-on will be 0.1. If you got this set at 1, second add-on will be 0.2, then it'll go to 0.3, 0.4, like that. In this case, you only get 2 add-ons, so if you had Marty turned on, first add-on would say be 0.1, second add-on would be 0.2 with this setup. And the breakout lines are just like we had in the previous demarc ones. If you leave the candle closed, turned to false, that means it's got to break out by 2 pips. When it breaks 2 pips, then it will take the trade if it gets confirmation from in this case, the demand zone. So once it breaks out, looks for confirmation from the demand side of it. If it gets confirmation, then it'll take the trade. If you turn on the candle close, all that means is this has to close above the breakout line, and then on the next candle it will look for a trade if it's getting confirmation from the supplier demand zone, whichever way you're going. Auto draw, leave set to true. That means these lines will update every time a new fractal appears over here. They will redraw. If you want to move these around, that's why you would turn this off. You would set that to false. Then you could put these where you want to, and they will stay there. If you set this to true, even if you move these around, next time a new fractal comes in, they could change on you. So if you don't want them to move around, set that to false. And if you just want to use horizontal breakout lines, if you don't like to try to make these horizontal, you can set this to true, and then it will draw horizontal breakout lines on here for you. And then of course when you grab them and move them, they just move up and down. They don't have to worry. These here, you can angle them. Subtem filter. 50% is the zone, that's this gray area, and you can see it's 50% of the distance between the top of the green box and the bottom of the red box. And that works out pretty good. Because remember, the risk reward is what's going to keep you out of the trade if you can't get a risk reward comparable to what you got it set at. Okay, then we got the ADR multiplier for the spacing between here, and in this case it's set at 1, so that means the space has to be at least 1 time the ADR, and if it is, you will get a green light here saying subtem space is okay, so the space is at least 1 ADR in this case. Show all subdems. In this case, you notice we don't see any previous supply or demand zones. If you want to see them, you can set this to true and it will show them. But in our case, all we're interested in is the 2 latest supply zone and demand zone, and we always trade the freshest of the 2, which in this case is this zone. So this breakout has to occur within this gray box, and the risk reward in our case, because we got it set to 1, has to be at least 1 to 1, and the space between these 2 has to be at least 1 ADR, so it has to meet all those criteria. Line levels set to true, all that does is draw these lines. That's just for your information. We don't use them for anything. The TS doesn't use them. But if you want to put some lines on there to see where things are at, you can do that. And this is always 50%, or whatever percentage you put these at, is always the distance between the top of the demand zone and the bottom of the supply zone. And it's always in reference to which direction you're going. So in this case, if I set one at 25%, it would be down here. But if it was coming down from trying to do a sell, if this would have been our fresh zone, it would be 25% from there. So they always reference from which direction you are going. Alert mode is just like in the other ones. You turn on alert mode, you will get an alert yellow button up here, and back in the dashboard you will get a yellow arrow instead of a red or a green arrow telling you you got an alert, and you can come and look at it and see if you really want to take the trade or not. And then we got acceleration in here too. If you want to use it, it's up to you. All that means is when you get a trade alert, the price has to exceed the previous candle's high or low, whichever direction you're going. I really don't use that too much. Okay, so I think that goes through everything in the settings. You notice there is one extra. Button here is called Show Fibs. If you click on that, it's going to show you some fibs. Now what it does, these are just for your looks. I mean, you can look at these whatever you want to do. What it does, it calculates from the supply zone high, the latest supply zone high, to the latest demand zone low. And they're always calculated in the direction you're going. So as you can see, here's our 236, because it's calculated from down here. This is 23.6 of the distance from here all the way up to there. Here's your 50% point, which would be right in the middle. So these are always calculated from, in this case, the low of the demand zone to the high of the supply zone. But those are just for your looks. They don't function in the TS. And you can turn them back off to get them out of the way. Okay, so I think that about covered it. Let's see here. What we can do is save this. Save it as our default. Go back. Turn all the charts off. Turn them back on. Open them all up. And let's go. Nope, no signals. I just wanted to see by chance if we had any signals, but we don't. So otherwise I'd show you which one looks like if we had one, but we don't. And I'll close. These are right on top of each other. Here's you telling you subdim too close. Well, we know it's too close. They're right on top of each other. Those are too close. So you can scan through these quickly and just look at them and see if it's telling you they're too close. Or whenever this one's okay, it's telling you okay, but right now it was looking for a cell up here, but now we're down here, so we're going to have to wait till a fresh demand zone forms down here before we can look for a long trade. And this one was looking for a short. We're past the short. Now you notice in this case, this thing is still, this happens back in the Mark one too. You notice there is no red dotted line. The reason for that is you'll notice there is no lower price within my chart, within the data I have on the 1 hour, so it does not draw that lower line. So in this case, it would not look for any short trades because there is no price lower. Now we can do this. Let's go up to the 4 hour. Let's see if we get one. There we get one because we got a lower points going back. So there you see the red line came back, but back on the 1 hour, there is no lower points to draw it from. And remember, the red dotted line always has a slope up. The green dotted line always has a slope down. So all you do is you start at the last, these are actually fractals, and you go back until you hit the next one that's lower. In this case, this one must be just probably 1 pip lower, just barely lower. So you keep going back until you find one that's lower. Okay, so I think that about covers everything in that. So wrap that up.